Welcome back to Trade and Wait, where we're going to analyze price action on the ES price chart utilizing ICT concepts. Our focus these days is the 4-hour time frame, utilizing the 4-hour or the 60-minute time frame as our daily chart, as our high time frame chart. So if things are clear on the 4-hour chart, then honestly, I don't look at the 1 hour. And honestly, if things aren't clear on the 4-hour, I generally don't even consider anything unless I drop to like a 15-minute chart. That kind of tells me, hey, my trade identity at that time is a scalper setup. 15-minute, 5-minute, 1 minute, and yeah, this 4-hour time frame, 1-hour time frame, I'm very comfortable there because you get to see, like on this 4-hour time frame, especially when you delineate the weekly range or the previous week's range, you get to all these swing lows and swing highs between these, whatever color this is, peach or whatever, tan, I don't know. Anyway, whatever color, whatever is between the highs and lows, these are weekly levels because these are the weekly range, previous week's range. So you can literally trade, trade ideals based on the weekly. These are AKA, again, higher time frame levels. That's the highs and lows. Likewise, if you delineate the midnight open on the 1-hour chart, for example, you not only get weekly highs and lows, you also get daily highs and lows. Again, we have higher time frame key levels, and so that's that, right? It's all on you how you see it. So some people would see this as a tight consolidation, and they would be right? This is like a range. The price was range bound, and it broke the range here. Literally broke it, optimal trade tree. So from utilizing this low to this high, this would be halfway, the midpoint equilibrium of that range, and this would be an optimal trade entry, 61.8 entry long. And see if we can, right? So 61.8 as an entry, and I eyeball almost everything. So I know that's off by a quarter, a tick, right? Because the high here is 59.27, but that's like a marginal. That's like an acceptable variance. That's not, to me, it's not statistically significant to fine tune it. So anyway, all right. So here you can see here it says, and this is a 4-hour time frame, and in general, the 4-hour time frame is used for short-term trading, holding positions for 1 to 2 days, for example. But it's perfectly, if you think in terms of discount, premium, as well as internal range to external range, just those two principles alone, discount to premium, right? That's that run up, and then a retracement into discount below 50%, below equilibrium. That's one principle. Second principle is discount to premium is what we just discussed. And the next one is internal range to external range liquidity. Let's remove that because that point is clear, hopefully. So here I have highlighted this order block, and then when you have a series of down close candles trading back into an order block, that becomes a propulsion block. So anytime price trades into that, it should propel price higher. If you don't like that, that's fine. If that's not your thing, you don't see these order blocks as significant, or that's not your PD array, then you don't have to take it. But That is, this trading into this order block is literally internal range liquidity. The swing highs, swing lows, that would be your external range liquidity. That would be this relative equal highs here. This would be the target for external range liquidity, right? Another PD array here, which makes this a high probability trade setup, is because this fair value gap is here, and you can see price respected consequent encroachment here. And again, the bodies tell the story and the wicks do the damage. So let's see, I'm just kidding. You guys been here for a while, you know, I'm like a curious person. So let's see if that's like a quarterly level, like if the bodies respected the quarterly level. And okay, that's there. Let's see with 300, that's right. All right, so still say it respected the quarterly level because again, the bodies tell the story and the wicks do the damage. So let's leave that like that and see if we can, if we kind of get some more insight here. All right, so so if you didn't do order blocks, propulsion blocks, you have an imbalance that's inside of the premium, inside a discount. You can see here, this is 50% again. This is the same range I identified earlier. This is the midway point. Let's just draw that out. That would be the midway point of that. All right. And previously we showed that that's also an optimal trading tree. And let's see what that looks like if we don't utilize the wicks. Let's walk that out to 295. All right, let's do 297. All right. So just utilizing the bodies for entry is still decent. Still a 61.8 entry, and here's your 50% of this consequent encroachment of this fair value gap. And you see price trading back into the high of that fair value gap here, right? Open here, pull back. And what candle is this? It's the 10 o'clock candle. 10 o'clock candle. 10 o'clock to 1400 hours. Oh, 1000 hours to 1400 hours. That's the 10 a.m. candle to 2 p.m. And you can kind of see, excuse me. I have allergies or some type of cold. I don't know. I think it's allergies though, but just be patient with me, please. And I'll try to make this video potent and as quick as possible. All right, so let's see. Let's draw back the order blocks, propulsion block. And just make that a little thicker with that so we don't have to waste time labeling these PD arrays. This doesn't matter because we're not going to go way back here, and we can utilize this or this equilibrium quarterly level. Now yesterday, this small fair value gap was significant as well yesterday, and I was looking for price to, when price traded here, I was looking for price to take out this this buy side liquidity, and it didn't do that. Obviously it didn't do that. There is an ideal here for swing lows and swing highs when the third candle kind of does this behavior, runs these lows, that we can kind of anticipate some lower price action. However, it becomes a little bit more clearer on the utilizing divergences between the NQ and the ES, and the divergences between the ES, NQ, and the YM. And that's what we have here on the 5-minute chart. Is the NQ continuous chart and YM continuous chart. Here are relative equal highs on the ES. Saw your swing yesterday. It didn't take out the buy side. NQ rated the buy side, held above it, then dropped below, following the YM and the ES. So the YM ES failed to go higher. This is your divergence. Supporting prices lower. Where can we anticipate price going due to these divergences? Into a discount array. In this case, again, the propulsion block or some quadrant of this bullish fair value gap. And then obviously propulsion block, as we discussed, trading down into that propulsion block or the consequent encroachment of this fair value gap and pushing prices higher. And you can still see price trade down into that consequent encroachment of this fair value gap or the propulsion block, and you can see the levels on this fair value gap being respected, and pretty much every level here, especially the highs, lows, and the consequent encroachment of midpoint. So in cases of divergences, right, the ES, YM were the weaker ones in price, kind of like pulling price down. NQ was the stronger one, went down with it. However, we would call this when trading, and this was also the sign for us to go higher too, because it also refused to go like lower, right? Anyway, that's all I got for that. Let's get back into price action. And one of our focuses have been focusing on the 4-hour chart, 1-hour chart, utilizing that as our higher time frame chart, and then utilizing the 5-minute, looking for setups. And we're going to focus on today, right? So you can even say that price ran below the previous day's low and traded back inside the range of 2 days ago high and low, because this was an inside day inside the range of the previous day's range. Likewise, this day is also an inside day initially until we had a sign that price wanted to go higher. So this is the range, right? So price was in pretty much essentially consolidating inside of the upper quadrant of the previous day's range or Tuesday's range. Then it dropped down into a discount, and that would have been your optimal trade entry long. Just looking at it on the 5-minute chart, and that would have been a completion of a market maker buy model here. Right? So let's just see here. Low to high, again 61.8 during the London session, and we have a retracement lower here for another optimal trade entry, but we have an inverted fair value gap. You also have a quarterly level on the 4-hour fair value gap, inverted fair value gap here at 0430 hours on Thursday the 15th. That price traded down here during the news, high impact news, unemployment claims. Then you can see consequent encroachment, leaving portion of this bullish fair value gap open and still supporting prices higher. So that's that. See, so we have that propulsion block here. I think everything, I don't know what else is there to say. All right, so let's focus in on Let's focus in on the 10 o'clock candle. And this again, this is the London session, the London kill zone rather. Then we have this period, which is primarily an accumulation phase. Then we have 9:30, for example. That's like a force, generally a manipulation time, market discovery, 9:30 to 10, for example. And then we have an expansion higher. And so we have the London session creating the low of the day. And again, trading into this previous Tuesday's range, into a discount. But we see it running below these lows here. Then you see a break in market structure here above this high. Break in market structures here at the 0730 hour candle, and then a retracement into this inverted fair value gap. There's also an optimal trade entry, like I said. Optimal trade entry here to here, and that's your entry at 8:30. Then it took off, targeting 2 standard deviations. That's 59.4450, and the high here is 59.4450. Yes. So again, just trading like 4-hour candles. You see here, run on stops, followed by break in market structure, a rate higher, and then another like break in market structure, pull back into this imbalance, and then taking off. And you can see all of this now looks like relative equal highs too. But these are the highs that I was targeting here, previous 2 days range. And that's that. And you can see the expansion here. Let's see, tables. And you can see here, excuse me. And you can see here the 10 to 2 p.m. 57.5 points here. And it doesn't mean that you have to capture the low for this optimal trade entry, but you had other options here. You didn't have to catch the low, but that's literally your power of 3, your open, price open here, ran up. Then you got your manipulation. So you got your open, your low, and then that's your high, and then it pulled back to close here. And honestly, around this level here, it's a daily level. You can see price trading back into it like right now, in some type of speed, getting held up though. So we have this is like the break in market structure. You got 1, 2, 3 here, pull back. You want to count this again, 1, 2, 3. I don't know. That's on you. Is there a break in market structure here? Here. I don't really, it's a small gap here, so to each his own. You can use that. There's a breaker here, high, low, higher high, price retrace back into that short, taking out these relative equal lows back into these imbalances, push higher, right? Run on stops. This is all like balance. So if price does pull back, you want to see it hold above this imbalance here, this inverted fair value gap. But you got a tiny fair value gap here. That's like surgery though. You probably would have missed that, but if that's your thing, you would have seen it quicker, right? Tiny little fair value gap there, but the breaker is strong. The breaker is there. And the breaker block is this whole, technically is the is the high and the low as well, but you can see here that's using the bodies, that bodies stay below, and the wicks did the damage here and then continue to drop prices lower. So that's that for right now. I only mention it because I see it. And that's the case. Price gets below here and holds, and obviously we can kind of see here, but it needs to get through all of this first. So anyway, this is a nice bull run higher, optimum trading tree long. Let's see if that's also a thing here as well. Let's see. We have this impulse leg 1, impulse leg 2. Unless I measured it wrong, but that's pretty good, right? Not that bad. Almost traded the entire range of Tuesday and on today, right? So, excuse me. All right, so we covered optimal trade entry. We covered market maker buy model. All right, price traded above here. This is a breaker as well. That's all I got. I'm out of here. Catch you next time. Peace.